What's up, guys? I'm Mike from StockedUp, and welcome back to the Stocks with Mike and Tom show. We have another action-packed episode for you guys here today. We have some important news with Goldman Sachs on how they agreed to pay almost $3 billion in fines. We have some news on the stimulus deal for the coronavirus. We have some news with Intel dropping pretty big on earnings and after hours. And we also have some news on Gilead, which is like one of the COVID stocks. So make sure you guys stick around to the end of the episode to hear all of the news for today and all of the plays for tomorrow. If you guys aren't subscribed already, don't forget to subscribe. We are just under 30,000 subscribers. So if you guys aren't subscribed already, don't forget to. But with that being said, Tom, what happened in the stock market today?
Yeah, there's really some exciting stuff that went on today, and the FDA just approved Gilead's drug Remdesivir for coronavirus treatment. This is fantastic news for Gilead as they have slid 23% from their high in July. And you can see in after hours right now, they're really looking good. And from close to the high, they were up around 6%. And right now they're sitting around 3.8 to 4%. So it's up pretty good right now in after hours. And if we go to their daily chart, it's just this stock almost needed this FDA approval because you could really see how much they've tapered off over the past couple months.
Absolutely. I mean, you said that it was like it's 23% down from July's high.
Yeah, from July 17th.
Oh, yeah. So, yeah, they really taken a beating the past couple months, but obviously this is good news. And we might even see a couple days of this stock running up, depending on how it reacts in the morning.
Yeah, it's just awesome to see this stock running like this. And it's really good that we have a U.S. drug that's now FDA approved for treatment. I think that that's going to make a big difference in the virus and stuff going forward.
Absolutely. What other news happened today?
Yeah, Intel was another big one. And this one's kind of bad for me because I'm holding 100 shares. So it's not good to see Intel falling, of course. But, this was pretty expected. They've lost some contracts lately. So going into earnings, they actually didn't have too bad of earnings. I'm going to pull up a screenshot for you here. This is from CNBC Now. And if I zoom in a little bit, we can see that their earnings per share were 1.11 versus a 1.11 estimate. So right on point for the earnings, and their the revenue stream was 18.3 billion to 18.25 billion. So the earnings weren't great, but they weren't bad either. They pretty much hit expectations, but they actually fell because of weakness in its data center business. And, this is a little strange to see, but data center and data technology nowadays is a really big deal. And we all know that Amazon, that's a huge part of their business, is Amazon Web Service and different cloud computing software and stuff like that. And it's really going to affect Intel, and that's why they dropped in after hours.
Yeah, I mean, you're only holding 100 shares, so you're just averaging in slowly over time, right?
Yeah, I averaged in here, and I kind of expected them to kind of come back down towards support, so I didn't grab too much.
All right, cool. Well, on the bright side, Tom, you can probably sell some cash secured puts for some pretty nice premiums tomorrow if you want to, or even in a couple weeks. Like, even though you like this stock for the long term, when it falls, you can get some pretty good deals if you do some cash secured puts.
Yeah, that makes a lot of sense. I mean, it's just a smart play, and if the stock goes back up, then it's just a win-win scenario.
Yep, absolutely. And then, was there any other major news?
Yeah, so Pelosi was actually talking today and warned Congress that they could actually still be far away from a bill, and that it would take quite a few days for them to actually write up a bill if they actually came to an agreement on these talks. But she said that they're just about there on reaching a deal, but just keep in mind, it's still going to take some time. So even if they reach a deal by the end of tomorrow, it could still be a week or two for them to write that bill up.
Yeah, hopefully we just get a deal done. We've been waiting way too long for this, and hopefully they just come to a deal tomorrow, and then the market can just at least have a little bit less uncertainty and just make it just a little bit easier to trade. The stimulus deal, the election, and earnings season has really made the market pretty crazy, as we all know. So hopefully we can just come to a deal. It'd be great for the market as well as the economy. So be on the lookout for that. And then what was the news with Goldman?
Yeah, Goldman, you can see they actually moved up a little bit today, which is weird to see off that news. But you can see that they went ahead and they agreed to pay more than $2.9 billion to resolve probes into its 1MDB scandal. And what this scandal has to do is that in Malaysia, there was a Malaysian fund with around $600 million in there. And pretty much they just emptied that fund and somehow took that money. And now they're going to have to, the company itself is going to be paying $2.9 billion, but Goldman Sachs is going to actually be going after some of the executives and people who were in charge there while this scandal went on. But just keep in mind, I don't know too much about the scandal. It's just a pretty big deal, though, that they had $600 million and then it disappeared.
Yeah, so I mean, it's not horrible news for Goldman, but you just read the headline and they're going to pay almost $3 billion in in fees, but really to Goldman, that isn't too much.
Yeah, it's almost like their stock went up because they didn't make them pay enough in fees or something. It's kind of crazy.
Well, wasn't it Goldman last week that had pretty good earnings? Where didn't they make like $7 or $5 billion just off of trading in this past quarter?
Yeah, it was awesome. Their revenues just off from their trading department were skyrocketing.
Yeah, I don't remember the exact number, but they were making probably somewhere between $4 and $5 billion just in this quarter from trading. So as funny as it sounds, a $3 billion fee to Goldman isn't that much. So yeah, so thank you for sharing that. And then Tom, we have to go over Tesla. I mean, we've been talking about this for, I would say, at least a week and a half now. And we say this almost every episode, why we don't like to play earnings plays. And Tesla is a prime example. So Tesla reported earnings yesterday, and they are up just under 1% today. Tom, can you go to Tesla's weekly options chain?
Yeah, for sure.
All right, so we type in Tesla, and we can see October 23rd. If you can scroll down just a little bit, we can see that the calls are down anywhere from 99% all the way down to 13%, right? And the puts are down from 99% down to 10%. There's only a small percentage of calls that are actually up today on Tesla, and they are deep in the money, and they're not even up that much. So when you look at the Tesla options chain, pretty much every single option is down today. Even if you go out a little bit further, Tom, it's let's say you went to, I don't know, let's say you went to the November 20th expiration, and these options have a lot more time, November 20th, and you go to, let's see,
if they have too many strikes on Tesla.
Right? Yeah. So taking a little, okay, there we go. Perfect. So, I mean, we're looking at options that expire in 30 days, and the puts got killed and the calls did. So this is a prime example of why we don't like to play earnings plays, because even if you predict the direction correctly, you can still lose money. So just know that the options chain is priced in a way where over the long term, when you trade earnings plays, you're going to lose over the long term. It's kind of we actually had someone talk about playing a strangle on Tesla yesterday. And for those who don't know, a strangle is when you buy a call and a put for the same expiration with different strike prices. So for example, let's say Tesla is at 425. A strangle might be you buy the 430 strike call and the 420 strike put. That's just one example, but that's one of the quickest ways to lose money in the options market, especially if you're playing strangles on earnings. So basically, if you just know that if you try and buy a call and a put on earnings, it's kind of like betting on red and black, on roulette at the casino. In the long run, it just doesn't work. Sometimes in the options market, there are rare scenarios where it ends up working, but just know that doing that in the long run does not work.
Yeah, it's just crazy. I can't believe that they went up that much and then came back down, right it open again. And you can see that the implied volatility just got clapped today. And what they start off at 78% and fell all the way to 68%. That's a huge fall on the IV.
Absolutely. Yep. So yep, that's another thing. What's called IV crush is, like Tom just pointed out, the implied volatility went from 78% all the way down to 67%. Basically, that just shows the price of options and the expected volatility. So when that falls, options lose value. So that's a good example. And I think that this Tesla example today is going to be a huge learning lesson for a lot of people. So now for today's member of the day, and it's not a Discord member of the day, but it's actually a member of the day from the YouTube comments. So a huge shout out to Christopher Z for just leaving great comments on the YouTube channel. I saw that he's just been leaving comments just to help support the channel and just get us closer to our 30,000 subscriber goal. So I just wanted to give a little shout out to Christopher Z just for being a great member, just for helping us grow on YouTube. So we really appreciate it. And thank you for leaving comments for us. We really appreciate it. So now for our momentum plays for tomorrow, and the first one is RCL. So RCL had a pretty good day today. They were up about 4.5%. Tom, what levels should we be watching?
Yeah, make them break right above 63.50, and this was a pretty good double top today. I really like how they hit this at market close as well.
Awesome. With the next play, we have UAL.
Airlines, here we go. Go ahead and make them pop above 37.50.
I mean, I saw the airlines start to run a little bit today. I was looking at all of them. UAL, United doing pretty good. LUV, AAL, even JETS, which is the ETF. I mean, airlines are creeping up there, so keep your eye on airlines. And then we have MGM, which is the casino stocks, which are also creeping up there a little bit.
Yeah, go ahead and make them hit above 22.70.
All right, so we are eyeing all these plays potentially to the upside only if they can break above the levels Tom listed. So now for our unusual options activity for tomorrow, and we are looking at the DraftKings 45 strike call options that expire next Friday, October 30th. And Dkng is the ticker, and there was about just under $2 million put into this play. But I'll tell you, looking at DraftKings, I mean, is it just me, or do you see a lot of bounce potential right here?
Yeah, I do too. I really like the greenness that they've had today, especially at the end and in after hours. It almost looks like they want to run in after hours even. And I'm really honestly excited to see DraftKings open up tomorrow. I think this could be a big play, especially with a guy putting that much money in. And on the daily chart, it's bouncing off of the 100 SMA as well. And as we all know, I love the 100 SMA. So
the greenness, Tom.
the greenness.
Right. So yeah, DKNG, it's bouncing off a solid support level at around $40. It's bouncing off Tom's, you said 1,000 SMA?
100 SMA.
100 SMA. And it just took a beating recently, but overall, it's a pretty strong stock. And, they have some pretty high expectations for the future. So looks pretty decent. So I'm gonna have my eyes on the DraftKings 45 strike calls that expire next Friday for sure. So now let's get into our comments from the previous episode. And with the first comment, we have Sam saying, a newbie question here. When you say make XYZ pop above X or make ABC drop below Y, what is the action you are suggesting? Thanks for clarifying in advance. So a great question here. So basically what Sam is asking is for our momentum play. So let's give an example real quick. Let's say we look at UAL, right? If we look at UAL, Tom, what level did you say you were watching?
37.50.
All right. So basically, for 37.50, if it breaks above that level, basically it depends on what type of trader you are. If you only trade stocks, then since we are looking for it to break above the level, that means we would be bullish on the stock, meaning that we think the stock is going to go up. So if you only trade stocks, then you can either just buy shares of UAL, or if you're an options trader, you can buy calls in this stock, or even if you're an advanced options trader, you can short puts, but that's a different story. But another example to the downside is, I'm just going to give a random example right here. Let's say we look at BYND. Like I said, this is a random example. Let's say we said we're waiting for it to break. Let's say we said make it break below 168. Since we are looking for this stock to break below a certain level, that means we would be bearish on the stock, meaning that we think it's going to go down. So that means if it fell below 168, you can either short the stock if you were just a stock trader, or if you were an options trader, you can buy puts, or if you're an advanced options trader, you can short calls. So basically, if we say that we are looking for something to break above a level, we're bullish. If we're looking for it to break below a level, we are bearish. So great question right there. With the next comment, we have Hunter saying people are going to get hit by the IV hand of God on earnings. So I agree with you. And basically what Hunter is saying is basically what happened with Tesla today. So Tesla's implied volatility went from about 78% down to, what is that, 67,
67, just about.
Yeah. So basically the implied volatility fell. And what happens after earnings is implied volatility falls and options lose value. So I definitely agree with you, Hunter. And we are in earnings season. So we're seeing a lot of stocks report earnings. After they report earnings, their implied volatility falls. In turn, their options fall and they lose value unless the stock moves outside of the market maker expectations. But the main thing to know is after earnings, options values fall. And a lot of people who like to gamble, like on Tesla, normally like in the long term, that strategy doesn't work out, playing earnings.
Yeah, and the more anticipated that those earnings are, the higher the implied volatility will get. And then if it doesn't go in the right direction, then it just will crash even more.
Exactly. So like, for example, if a stock is like, if it has like an expected move of, let's say, 4% on earnings, that implied volatility crush isn't going to be as powerful as a stock that has like a 15% expected move. So that's a great insight right there. And it's actually very useful because what happens is all of these hype stocks like Tesla, like BYND, like all of the stocks that like everyone watches, like PTON, like Fastly, FSLY, like all these hype stocks. We'll look at Tesla right now. The market makers aren't stupid. Like they price in a large expected move before earnings because they know that the stock is pretty likely to make a large move. So like a lot of the times the stocks that everyone has their eyes on and the stocks that are hyped up more than anything else are the stocks that end up getting hit the hardest in terms of the options market when it comes down to an IV crunch, because they have the highest IVs.
Yeah, it makes a lot of sense. I mean, the IV plays a huge factor into these, obviously, and it's just one of the biggest things to look out for, really, whenever you're trading options, because especially in earnings season. Normally the IV, obviously, it matters, but normally it's not too big of a deal as long as you catch, a good movement in the stock. But with earnings, it's like the whole ball game right there.
Yeah, for sure. So with that being said, Tom, do you have any last minute stocks, options, or any insight for the market for tomorrow?
Yeah, I wanted to go ahead and highlight our IBM play from yesterday, which was another momentum play that we called out yesterday. And we could see that we pretty much called it to fall below 115, just about 114.65. And it fell below that and just tanked today down to 113. So that was a great play. And, congrats to everybody who got into this one. It was a really good play. And they've had a lot of negative stuff about this company lately. And it was just due to keep going down.
Yep. And then like Tom listed earlier, is just a quick day trade. You don't have to hold this forever. So it's just a quick day trade, and that ended up working great. So thank you guys so much for watching this video. Tom and I really appreciate all the support that you guys give to the channel through the form of hitting that like button, commenting down below, and of course subscribing. We really appreciate it, and all the comments in the comments down below really help grow the channel. And like I said, we really appreciate it. If you guys have any questions, let us know in the comments down below. Other than that, thanks for watching.